Good morning, y'all. I'm Catherine Ross of TheStreet. I am here on the floor of the NYSE with Jim Cramer. Jim, you just spoke to AMD's CEO, Lisa Su.
Lisa.
How's she doing?
Okay, look, Lisa is a very interesting figure because she's often, her company's often confused with NVIDIA. And while there are overlaps, particularly in gaming, she has a division that a lot of people felt was kind of moribund, which is the PC business. And as Eric Johnson has done unbelievable reporting, that business is on fire, and she's taking share from Intel, which has some shortages. She's got some new products, 7 nanometer product that's going to do well for servers. She is moving in the data center. She's not as big as NVIDIA. Obviously, gaming has some weakness, and that's China. But she's put together a pretty good mix. Now, she's using a very aggressive second half that a lot of people feel she cannot meet, okay? She is saying to me she absolutely can meet. So therefore, the stock, like many of the other semis, I had the SMH, I had Carolyn Barodin last night, a real money contributor. SMH, she thinks could break out here. But I would say, you see Micron, Definity off the bottom, it's up 10 from the bottom. You see Broadcom almost at its 52-week high. You see Xilinx, which happens to be the new name of my dog Marley, breaking out 111. And so you're seeing a group that had been a leadership group that had fallen first, that is now coming back. Now, if you get a China deal, which Tim Cook, when I interviewed him, he's a little more sanguine about the China situation, and January's up for Tim versus expectations, and you start putting together a theory which says that whole decline from October to the end of December was on Jay Powell, and also on China, ratchet up, but it's on Jay. And if Jay says nothing today, the rally will continue. That's my thinking. And the rally's got a lot of different components now. But AMD is indicative of a very strong semi-market away from NVIDIA.
Let's talk about this rally a little bit more,
Sure.
because this rally is being driven by Boeing and Apple. Now, let's start with Boeing.
Big
How's it going?
manufacturers. Okay, so Boeing is a very, I've followed Boeing for a long time, and Mr. McNerney was an inspiration for me because when the Dreamliner was having problems, he told me not to worry about it. Boeing has the 737. That's the money plane. That's the one that you sit down in, and it's really, you can't believe it's so jammed, and you got to sit in the aisle because if you go to the window, you got to wake up people to go over, and there's no room. It is a popular favorite of the airlines. They make a ton of money off of it. They've got a backlog that's huge on that. And what I want to tell people, and Dennis Muhlenberg is going to be interviewed by our own Phil LeBeau at CBC. China needs Boeing more than Boeing needs China. It was like 1% of China's, 17% of China's actually been on a plane. 1% of the world has been on a plane. The world, this is the great middle classification, secular growth story. It's not tied to Chinese trade, even though 1 out of 4 planes go to China. It's not nearly tied to Chinese trade because there are a lot of, when you have a 7-year backlog, there's a lot of other people who want to have those planes. So they've got the right planes at the right time. They are executing. They're putting up these new plane lines. They're producing the planes that people want. And so that's why the cash flow is so good. That's why they keep blowing out the numbers. So Boeing takes out the October price. I had said from December 7th of 2017 that this is a $400 stock. It's going there.
Now, Apple, I was listening and live tweeting their earnings call last night.
Yes.
One thing that I noticed, and that you're going to love, is that they were so bullish on the services sector.
Yeah, now the services sector, a lot of the analysts had blasted the service sector. Well, even Katie Huberty talked about the deceleration. There was no deceleration. Now, the way that they qualify it, it didn't have what they had before. It's like 25 down to 19, but it stayed at 19. There's any other company in the world that had that revenue stream where the gross margins are fabulous because they really don't have to do anything, would be a stock that'd be like at 400. But because it's overshadowed, correctly, 62% of Apple's business is the phone. You can't see the delta here. And they're going to still double it by 2020. It's almost if these analysts, if iPhones went down, they would then see the services more and they'd like the stock more. I like the service revenue stream, even though Chinese gaming was down, which is a big part of it. This is pretty consistent business. What's not talked about at all, the call is dysfunctional. These analysts didn't ask about the maybe possibility in China of things getting better. That's the January
I was a little
call.
surprised about that.
Well, I mean, look, I interviewed Tim. Josh Lipton, I interviewed him, and we get a lot more out of it than the analysts. I mean, there's a lot of good things happening here. Now, do I come in with a positive bias on Apple? What can I do? I've liked the stock since 5. The answer is yes. I always love that people say, you buried me at 200. I said, what am I supposed to do? Do you want me to just flip-flop? Do you want me to be a bad politician? The story hasn't changed. The long-term story has not changed, which is that they're innovating. The thing to watch is the watch. Now, a lot of people just immediately say, oh, Jim, the watch can't do anything. The accessories line is going up. The watch has a service component that is, I think, incredibly exciting, which is healthcare. Now, a lot of people dismiss healthcare as being a possible, something that Tim Cook talks as his legacy. Here's what you need to know about healthcare. Alex Gorski, no blowhard, CEO of Johnson & Johnson, is teamed up with the phone, the watch, for AFib. You can apparently, you get a baseline. A lot of people don't understand. When you're talking about AFib or you're talking about heart failure, people say, well, it gives you a lot of false positives. There are false positive issues. You have false positive. I mean, think about it. When you have the chance of prostate cancer, 3 out of 4 biopsies are false. 3 out of 4 biopsies. So, I mean, you're going to have to just deal with the false positives. That's just something that happens in every part of medicine. So the word, this is false positive, and it's non-biopsy false positive. But where I'm going is there's 7 million people with congestive heart failure that Mayo Clinic says if you wear the watch, you could detect by using artificial intelligence. There's 7 million people with AFib. Now you're talking about 14 million people. Now, Aetna did a deal yesterday. It was not a great deal with Apple where they basically gave you some, Aetna pushes some data to you, CVS pushes some data to you, CVS Aetna, return you buy the watch, and there's ways to be able to reduce the price of the watch if you do certain things. That's not what I wanted. Bertolini, who used to run Aetna, was going to give people hundreds of thousands of watches. When we see, Catherine, when we see premiums go down because you wear the watch, we see premiums and we see deals in Europe about AFib. People are going to say, wait a second, we got a revenue stream here that when combined with a service revenue stream is going to begin to make it so that you say, you know what, maybe the 62% prestige, 60% that is phones, is going to go below 60, and not because the phones are selling badly, but because service revenue and watch revenue are going up. No one is talking about the watch. On the service revenue, just so you know, I pushed them on the service revenue. I was the one who said, hey, guys, talk about the service revenue for heaven's sake. Over and over again, I wanted to buy Netflix. Say, yeah, okay, was it 25? Better lucky than good. But I said, push the service revenue. Well, they're breaking out the service revenue right now. They did say the watch was the equivalent of a Fortune 200 company, the accessory.
Which I was surprised about, honestly.
14, it could be 14, we don't know. It could be 14 billion. I mean, we don't know where that's going. That could go to be a Fortune 100, the watch. Fortune 100 is services. When you get a Fortune 100 company, again, you're going to say, where did this watch thing come from? Now, if watches are supply constrained, they can't meet demand for the watch, which is pretty amazing. And the watch, by the way, they've got all sorts of different style watches. This is denigrated. People are laughing at me. This isn't like the movie Carrie, where they're all going to laugh at me and you're dumping pig blood on me. It's not Carrie. But I am telling you that the watch is going to be huge because of health. And it is bugging the heck out of me that the analysts laugh at the watch. He who laughs will be laughing last. I am very, very big on the watch.
So we're seeing a market rally right now. We're up about 200 points.
And that's right.
Do you think that the Federal Reserve will change the market rally at all?
I think this guy's capable of anything. I think he's tone deaf. I think he's looking at the Brinker supply, the Brinker wage issue, more than he's looking at the full economy. He's not looking at Amazon versus Walmart, 100 million people trying to figure out how to get the lowest price possible. He's not looking at that at all. He's not looking at what I call the problem with the strong dollar. I have a piece in Real Money today about that. He is not understanding how fragile the U.S. economy can be given the fact that the rest of the world is slowing down. He doesn't understand what a slowing in China is going to mean for our companies. He's too parochial. He's too hair trigger. let's hope as he gets more acclimated to his job that he gets more serious.
Jim, we've got a slew of earnings to talk about over on Action Alerts Plus. We've got Apple, we've got Facebook.
Rigor is the word that comes to mind. The man must get more rigorous.
All right, so we're going to head over to Action Alerts Plus to talk about Amgen, Apple, Facebook, and a bunch others. So check us out there. I'm Catherine Ross of TheStreet. We'll see you guys tomorrow.